Good morning, traders. Welcome to Friday. We've made it nearly at the weekend. Morning, Kay. How you doing, mate?
Hey, good morning, Ryan. Yeah, I'm good, mate. Good morning, everybody. It looks a little bit bright for a winter day in the UK, right? I'm feeling like back in Norway. I mean, it's 10:30 and daylight just arrived shyly.
Yeah, I've got lights on and everything. Yeah, I woke up this morning, I thought it was still dark. Terrible summer we're having. Not know what we can do about that. What we do have control on is our trading, and that's what we're going to be focusing on as usual today. Right, I'm in lesson teaching mode again today. I'm going to start with China. Okay, they fixed their midpoint at 7.2006 versus 7.3065 expected. The strongest ever pushback against a weaker yuan, cried Bloomberg, using its daily reference rate for the managed currency as it sought to restore confidence to a market spooked by disappointing data and heightened credit. The People's Bank of China set its so-called fixing. This was the largest gap to estimates since the poll was initiated in 2018. Wow, they're going guns, they are in China. What I would like to point out is that these analyst expectations have not come close forever. I've never seen them get close. Well, I think once they came within 5 pips of estimating the actual fix. I've counted back the last 10, okay? 7 point, I'll forget the big figure, just look at the small figures. So yesterday, 2076 versus 3047 expected. They set 1986 versus 2878 expected. Actually, I won't go through the whole list to bore you. Anyway, they've been wrong by miles forever. And now the headlines are screaming that it's the strongest fix on record compared to analyst expectations. The problem is not what the PBOC is fixing at, it's the analysts and where they're expecting to fix at. Kate, these lot couldn't guess the sun coming up in the morning. So why is it such a big headline?
Because it's supposed, well, at the start, the PBOC said that they would use a basket of currencies to calculate this their own fixing. So, but straight away they started to use it as a way of trying to manipulate or trying to guide the market's intention. So it's a bit logic that if they use what they call their counter-cyclical factors, that the analysts and forecasters are wrong. But yeah, I mean, it's something that the PBOC can use if everything is quiet and normal, which it has rarely been over the past 3 years. Then they should be closer to what the PBOC fixes, or PBOC should be closer. They themselves told the market that they would use these kind of baskets. So it's a bit logic that the market tries to model those fixings. It's not only Bloomberg; it's everybody.
Yeah, Reuters as well.
So yeah, I think it's a way of sending messages that the PBOC uses. It's if you look at it right now, it's starting to be either obsolete, either PBOC says we are going to move away from this, and it's a bit of a strange one. But yeah, I know it's really bang on the money. But now it's yeah, and it's making headlines because they need to write about it, right? But it is a big divergence from where it is, because yesterday $CNY traded 728, 729, and they still fixed 720. So you can argue there's a bit for both sides to be said, that the models may not be completely right, but the PBOC is clearly playing a game here.
Yeah, definitely. I mean, you know, taking the what it actually means, you know, setting below market expectations is sending a message in itself. But I just can't believe these guys are so far off the mark. I think we could do a better job. I actually suggested it in the chat room yesterday. Maybe we should do our own official PBOC fix estimates, but I reckon we'll get a damn sight closer than these boffins. But anyway, that's my rant of the day for today. Over. Well, maybe I might make a bit of a rant a bit more later. Anyway, further news in the property sector: China's Evergrande has filed for Chapter 15 bankruptcy in the US. Probably one of those ones that it was going to happen eventually, and now that's been confirmed. So a whole host of restructuring talks are going to be going on with that one. Part of that and China trying to keep stock markets propped up as well is that they've urged buybacks at star market companies. Now this is the science and technology stock market, if you like, part of the Shanghai stock exchange. So this is all science and tech stocks that they're urging buybacks at some of the bigger companies there. Again, bit of a propping up measure there. So they're trying to pull out all the stops at the moment, China, to stop the market from routing everything in China at the moment. That we need to keep an eye on as well, because that's going to have spillovers, obviously, into other companies. We've already seen Chinese stocks listed on US markets getting hammered as well. That's going to be a reason why stock markets over there are on the back foot still, and elsewhere. Coming across to the data and China, and Japan, we had the next round of CPI data out, and I think we can start calling this one sticky as well. Was expected to pull back to 2.5% from 3.3%, and it came in matching last month. One of the core measures as well, national core, coming in as expected, dropping 2 pips on that one. But the core, which is the ex fresh food and energy, went up a pip to 4.3% as expected. So very sticky over there. The clock is ticking. Ueda and his pals were expecting inflation to come down in the latter part of their fiscal year or this year, whichever one they decide to use. It's just not happening, Kay, is it?
No, and worth noting as well is that services PMI hit the 2% mark for the first time. That went up, I think, if I'm not mistaken, from 1.6 to 2%. Because a lot of those data are not taken up in this calendar. There's a few other data coming out. So that is one worth noting as well, because usually services, they are regulated, or they really are reluctant to pass on price hikes. But and the last time this happened was only when the mobile phone subscriptions went up. So that's a good while ago that it hit the 2% mark. I think these numbers are really pushing Ueda and could push them over the edge. It is possible. Okay, we're still like a while away from the next Bank of Japan, but we have that little thing, and I need to confirm, but I guess same as Kuroda was before, that Ueda will be diving into the hole as well, in Jackson Hole, I guess, that foreign central bankers are there as well. So we could have a bit of a hint coming next week. We won't have to wait for the next Bank of Japan meeting. The companies, as we've seen in the meantime, are already starting to scream and shout that they will not be able to fund their needs if the rates go up. But I think we are getting closer and closer to at least that form of normalization which we have been talking about. It will still probably go very slow. Ueda can hide behind the core CPI slowing down a bit, but the rest is pretty perky, and I think we're edging closer and closer.
Yep, not that you'd know it in maybe this morning you'd know it in dollar yen. Seeing a little bit of a pullback on that, but I'm not sure that's the data or just other stuff going on during the course of proceedings overnight, markets and whatnot. But yeah, maybe it is starting to have a little weigh on the numbers there.
Yeah. The one I think we really need to keep an eye on, of course, because now also dollar yen was coming off on the back of lower risk, right? It just jumps from one train to the other. But I think the fact it's not really coming off sharply from that major level that I pointed out over the past days and even week in the 146.5, we tagged it, and now we're coming off. I think the one of the reasons, well, first of all, the dollar is holding up, and secondly, the JGBs are still very, very quiet, and we're trading around 63 BPs. Okay, we're back above 60, but it's very quiet still.
Yeah, staying pretty solid. Not going again. Another one that's not going down too far. So, but
it should actually creep up, but it's still slow. I thought we would have this typical Japanese grind, like 1 BP per day higher, for instance.
Yeah.
And then go to around 75 BPs for a starter, and then see what happens there. And I reckon the Bank of Japan is already going to buy some JGBs if we go to this first hurdle of 75 BPs. But it's all going very, very slow. This market is a slow market still in Japan.
Yeah, we got over the initial reaction, had a little bit of a pullback. The BOJ just making sure that everyone knows that they're not going to let it turn into a runaway train. But then this has been really the creep higher that we've had, just making a new high, even by a few BPs, keeps the trend going. But yeah, I mean, we got a dollar yen's doing a lot on the back of yields, US yields again as well. I mean, we last night we had a little bit of a crap out, went up to 146 again pretty quickly, then yield crapped out again, and that's when we've seen dollar yen dipping again. US yields seem to be, every time they make a new high, they seem to get vertigo and have a steep pullback before trying again. I don't know if there's a bit of profit taking going on when the market sees a decent jump. But again, we've got a lot of volatility in bonds. It's been that way for the last couple of years now. You never used to see 10, 15, 20 pip moves a session, and now it's a given that we're likely to see that.
Yeah, just if you zoom out a little bit, we just yesterday tagged those October 2022 highs in the 10s. And I guess that's where we saw some take profit coming in there as well, or shying away from that.
Yeah, definitely.
There's also very little treasury issuances this week, especially in the longer end. Next week we will have the 20 and 30s, and that's going to be interesting because the long end is really very, very, very perky right now, and that is hanging around as well, those October 2022 highs. It's shied away in a similar fashion on the 30s, but we're still very close to those 2022 highs in the 30-year as well. And next week we'll have a bit of an treasury bond issuance there. It's not huge, but it's always like a good measure point of what the market is doing with the long end.
Yeah, definitely. Right, moving on, coming over to the UK and some very soggy retail sales numbers, which I'm not overly surprised at. I mean, I know the excuse has been given is the weather, and that's been chewed over in our chat room as well. It does have a big influence over here. I mean, July was an absolute washout, and then a part of July particularly, absolute washout. So I'm not surprised to see retail sales taking a dip there. We did get fairly strong numbers the prior month, which surprised to the upside. And again, I wasn't surprised about that because we had the coronation and some very good weather. So though not a lot of people think about the weather effect, it is impactful here. The question is, take 2 months, both months as a whole together, puts us, probably sort of flattish. We need to see what happens from here on in. If we get another soggy reading next month. Again, I wouldn't be surprised because, again, the weather's been absolutely rubbish. But still, you know, people are going to spend what they're going to spend. If we start to see a real trend lower in retail sales, then that might indicate there's something more going on. Over in the Eurozone, final CPI numbers for July, nothing to write home about. The core stayed sticky, 5.5%, confirming the flash staying the same level as last month, so stickiness there. Headline CPI confirmed the 2-pip loss over the prior month, so that one's moving in the right direction, but no changes there in the final numbers. Coming over to the US and just looking at the data yesterday, no real shakiness from initial jobless claims. We're creeping back up into the 230s, 240 area. As I mentioned on Face yesterday, I think anything below 300 is not going to get the market too worried. If we start trending above 300k, that's when we can really think that there's something going wrong or wonky in the jobs market. But yeah, I'm not fussed about these numbers at the moment. We've seen these small changes before. Fully fed manufacturing, the second number of the month, the new month for manufacturing, and a bit all over the shop. Was expected to fall -10, which was an improvement on last month, but it shot up to +12. But then some of the components coming out weren't all that good. Business conditions 3.9. So I mean, that looks a complete wonky number compared to expected and previously. Capex, that's investment category, going into the negative. Employment going into the negative, but decent pickup in new orders, and the inflationary prices paid number jumping as well, or over double what was expected. So a little bit of everything in there. Some stuff like employment easing, investment easing suggests weakness to come, but overall activity looks like it's a-okay, so we're in the soft landing category still for that one. That's all I've got for a Friday. You got anything you want to chuck up, Kay?
Well, nothing really new. It's just that there's more and more comments out in China about what they want to do, about plans that they have to reinvigorate the economy. We've put up a lot of headlines in our newsroom. But we're still lacking details and dates, you know, and that keeps on telling me that they know what's going on, but on the other hand, they may be a little bit surprised about the speed of things turning sour over there. And also, let's not forget, they are also struggling with climate issues or changes in weather and flooding and stuff. And the state-backed papers are trying to tell the world that everything is not that bad. But if you look at the money injections, they injected a record amount of liquidity into the market in the past year or so. Yeah, I think that's the underlying trend in China is still not good, right? And that is so there were a lot of headlines there. But for the rest, no, it's a quiet Friday, albeit risk is still on the defensive. I think a lot has to do with China on that front as well. But yeah, it's been quiet on the headline front, right?
Yeah.
There was this the other thing that I posted in our newsroom, and perhaps not a lot of people are tuning into that stuff. I'm on some chat with one of the venues, and RBNZ. I think he's the deputy guy, right? What's his name again? Let me see. I posted it, so let me find it. Yeah, Deputy Governor Hawksby. They seem to really want to be on hold, and after he spoke, I think the Kiwi market is a bit in doubt over what's going to happen next. But he seems to really be hinting that they have done enough. And that even if CPI jumps a little bit, which he says is a risk in the next readings, they are going to look at the overall trend, which is lower. So it just reinforces the idea that the RBNZ could be completely done here. He says that every meeting could be live, but he says, my opinion is, or the view is, the overall view is that it could be live as well for highs as cuts. And that was a bit a surprising line in there for me. So I just wanted to give that one here as well. But for the rest, yep, all quiet for the time being.
Yeah. I'm just looking at the Kiwi now, and we've hit an interesting level.
It's weak.
Yeah, and we've just hit that fib down there. So a bit of a line in the sand for the Kiwi down here into that 59 handle. Trend line underneath as well, which comes in, give or take, around just under 58, 85, 90, call it, under there. So yeah, that's I mean, they've been on pause for a while, so it's not exactly new news if they are properly on hold. Not that the market's reacting anyway. This is mainly being driven by the dollar side of things, and that you can tell by matching it off against a cross and our old mate Aussie Kiwi, which is again glued to that 108 handle. You think this might be building up for a decision either way?
Yeah, I think so. If you look at it price-wise, we are, of course, we can continue to track this 108. And there was this other interesting line in there, because everybody is always talking about the Australia being driven by what's happening in China. But Hawksby said clearly, because they were asking him a question about Fonterra, and he said clearly, China is also New Zealand's biggest trading partner. So when it rains in China, it's also pouring in Kiwi land. So because I thought before reading the report really that this was looking to build up to potentially looking at the Aussie weakness to potentially break down. But yeah, for as long as we are stuck to this 108, give and take 0.5% above below, there's probably not a lot to really go for. We really need to wait for breaks there, I think, to step into something.
Yeah, and it's always important to look at the crosses because you can look at Kiwi dollar, Aussie dollar, and think, oh, that's on the move. It must be one or the other. But when you match it off against the cross, you think then you can see that it's mainly the dollar that's doing a lot of the work. Although there is weakness for both the Aussie and the Kiwi on a commodity basis as well. Just coming back to China. Yeah, go on, mate.
It's just a global thing that I mean, out of experience, having been long in the market, the thing is with the difference between trading dollar and crosses is that if you look for really correlation trades, pure correlation trades, they are going to show up much more in crosses than in dollar pairs, because the dollar pair is driven by the dollar for one, and also what the difference is between the dollar and the other currency in a pair. But if you start to look at crosses, like for instance, as we've been playing in the room and a lot of people in the room, if you look at sterling Aussie, for instance, if you look at sterling yen, or if you look at the euro yen, the euro crosses have been remaining relatively strong compared to what euro dollar has been doing. Euro dollar has been slipping lower, but then if you look at the crosses, the euro has been doing actually pretty well. And so that is where your biggest correlation trades are actually in crosses rather than dollar pairs.
Yeah, exactly. Very much so. I did just want to come back to China quickly. I know Kay's on the long side of this, but I'm getting a bit twitchy. I had to scratch an itch yesterday. I think just the stepping up in rhetoric and bringing out a bit of a sledgehammer yesterday in terms of that headline about they want to encourage banks to do more to stop this move, just got me getting in a little short, which I will play up to these highs. I won't give it much room if it breaks those highs, but I think we might have a little bit of two-way action. Let's call it that. I'm not going to say this is all going all the way down to 710 or anything like that. We might get a little bit of similar pattern to what we got when they first started coming out strongly with the jaw boning when we hit the 728, and we got a bit of a period of consolidation, a bit of a pullback. So the chatter is that they're getting stronger in not wanting to let this go too far. So I'm just having a little feeler short, and so I'll build that up into that area, but won't give it much room above if it does break those highs. But technically, it's done what it needed to do. We had a dip overnight. It's hit that 728.29 area. That was a brick wall. We couldn't go no further. So technically, it's playing nicely. And you've got to respect the techs when that happens. You were looking to add a bit more down here, weren't you?
Yeah, well, I'm doing exactly the same as you, but then I'm trading it from the other side because I've already, I've been playing it long for quite a while, and then stepped out and then back in. Yeah, I think for as long as 727, 28 hold, the short term, nothing changes. Unfortunately, I missed a 728 add-on overnight by a few pips, but that's life. But equally, I think we are, at least until this BRICS meeting next week, we're going to trade ranges. And I've noticed that the PBOC sends out its submarines when we're getting close to the top end of their $CNY band, which is 2% around the fixing, right? So, and the
you mean when CNH gets up there?
Sorry, mate?
You mean when CNH gets up to the top of their
exactly.
CNY band?
When CNH gets up to the top of the CNY band, they have intervened already twice or 3 times. So that is really an interesting thing that I've noticed. And I reckon they will keep it that way until at least the BRICS meeting is over. And then we will see perhaps afterwards what's going on. What I mean by submarines, Bran, is that they send out the local banks, which are supposedly independent, but we know in China nothing is independent. So they are using those banks to go out and intervene. They're doing it not in such a stealth manner as in Japan may happen, but still, yeah, they are doing it that way. The thing is, Horatio, on this peak China pessimism, is that we heard already from actually one of the biggest European asset managers out there, and that was weeks ago when dollar China was still trading just above 7, around 710. That they said that the people are too pessimistic on China. But then in the meantime, you look at your let's just pull up the Hang Seng. I'm just going to look at it. In the meantime, since they've spoken about that, the Hang Seng is already like 3-4-5% lower. So it's people can call a lot of stuff, but I would like to see the end of it appear before really saying that this ship is going to turn around. We as traders, we always like to anticipate, but in this case, I would wait for real signals to accompany a turnaround, which is going to come sooner or later, but we may not be at the bottom of the story yet.
Yeah, and that's a good point you make, Horatio. You know, when you talk about market sentiment, one thing to look at with market sentiment and things like pessimism is when it gets to really extreme points. Now, at the moment, the stuff coming out of China is in line with that pessimistic view. You know, we get this Evergrande stuff, we've got the other financing stuff, we've got poor data, we got them easing. So all what's happening on the ground is matching the pessimism, which means the pessimism can go further. It's when it gets to extreme levels. That's when you've got to start thinking, well, the market's pushing it too far here. And it tends to do that. Market always likes to go to an extreme in its sentiment sometimes, you know, like with the Fed pivot at the beginning of the year. You know, no chance of a pivot, but they still tried having a go. So when you get sentiment, and I watch sentiment a lot when I'm trading because I like to try and counter some of those extreme moves. But in this case, I mean, what do we know from China? We know the data's soft. We know there's problems with financing. We know there's problems with the consumer. But this is China, and you've got to listen to what they say. And despite inflation going negative, they're coming out and saying that this was just a one-off. In August, inflation is going to go back up. Now, who are you going to believe? You're going to believe the market expectations, or are you going to believe China, who, inverted commas, can fiddle their own data? So with someone like China, listen to what they do. They're not the Fed. They're not all the other ones who talk out their asses. If they're going to do something, if they say something's going to happen, chances are it's going to happen. And if that goes against what the market is thinking, you're going to want to be on the side of the officials and the PBOC, not the market for that one. Hence why I'm dipping into small shorts, because what they're doing at the moment is far stronger than what they did when we got to 728. You know, they intervened a couple of times in their time frame. Now they're intervening in London and in New York sessions. Now they're coming out with stronger talk. All that just adds up to say that they're being a little bit stronger than what they were before, and you've got to pay attention to that when trying to trade it. Going to stay on stocks just to keep an eye on this one, because we have got some interesting developments going on here. I'll keep it on the daily actually. Had a further breakdown yesterday. I was thinking it might have been a little bit of a pressure release, that last move. We might see a bit of consolidation, but it's decided to keep going. What it's done, it's gone through a smaller area of support around here, 43.80, which was on my level, one of my levels. What it does do, it puts us in range for a bigger support area, or bigger technical area, down from 43.30 down towards this 38.2 fib, but called it the big figure, 4,300. It's been an old traffic zone. It's been an old series of highs and lows and support and resistance. I think if we get down here, this is going to be the biggest test this rally has faced so far. We've had all various points, you know, 44.5 and up top and everywhere, but these are the big chunky levels you need to keep an eye on. So this is going to be very important if we have a look down there. As I'm short, it's going to be a level I'm going to be watching closely. Looking at the intraday frame, there's us breaking that 43.80, and we're holding well below it. We did set a little bit of a boundary at 43.60s, 62, 63. We're testing that at the moment. We've had a little pip above below, but we're just seeing if we're going to break this area or not. If we break this 60 area, when the market parked the bus overnight, then we might be heading down towards that 43.30 area. If we're going to put a bottom in here, needs to retake that 80 quickly, then just get above some of these prior levels, highs, 42.20s, 44 big figure. But ultimately, unless we get back above this zone, it remains very bearish. So if you're trading stocks, and I know some of our chat room guys have had an absolute blinder playing this on the short side as well, I see no reason for this trend to change just yet. But intraday, just keep an eye on this 60, 80 zone right now. That could be the decider for where the direction goes next. Okay, did you want to take it for a couple?
Yep, sure. Yeah, sure, mate. Yep. I think I'm going to look at sterling perhaps today. Just have a look at a couple of sterling pairs to change things a little bit. Cable. So in the short term, we are looking at this, and this could potentially look a little bit bit, but if you look at the more medium term, we are still in this downwards channel, and we are turning around this level, which is around this 127.15.25, and we're really turning around. We had a bit of a sell-off on a slow sell-off, let's call it that way, on the back of the retail sales, but then the whole commentators community is blaming it on the weather. So gradually sterling is getting its own back here, and so this looks to me like it could be an all right level of measurement when the close of the day will arrive, whether we are above or below. If we are above, we could get back up to higher zones in the 127. Why not 128? If in turn we get a close below, then I think we are going to try the downside perhaps next week. On the euro sterling, well, this is your retail sales blip. It started again. It started already yesterday evening, but this is your retail sales blip. But the overall picture is still looking like it's looking a bit heavy, because we're already back. We already lost those 20 points that we did up to 85.60 on the euro sterling. We're already trading back to 85.40, so it's still looking a little bit heavy. Simon noted that 85 and a quarter around is the 88.6, and it stopped around there. We had a few previous lows there as well, so that's your next little level in between. But all of that is a bit of disappearing into the futility. If you look at the big level that's waiting here, right at the 85, and we have to look at that from a bit of a longer term perspective. 85, the figure is really where things are going to hold or accelerate if we break. Okay, so that's the big level that we are going to have to watch. Whatever happens between here and there is like just maybe some Friday noise, you know. There's another one that we need to keep an eye on, and that is sterling Aussie. If you look at it from the more medium term, we've broken above this trend line, okay, which was around 197 at the time. Since then, we never even had a look back at it, and whatever gets thrown at sterling, we are not even getting below this correction line here around 198. The figure is still holding very, very firmly. I'd argue that as long as we hold this 197 figure 20, and I think the level of no return may be now around 196. It's still looking very, very big, and yeah, why not? You know, continue to push higher, because it's just holding. It's just holding. Of course, the Aussie is the weaker side of it, but as we see, the sterling is still pretty resilient. Okay, so that is one that is really noteworthy of what it does over the past sessions, because it's still looking very strong. That for the sterling, yeah. Coming back to what I really said about this dollar yen, I need to. Why did I not have this? So here, 78.6 of the 152, 127 drop, trend line coming in. 1.272 extension. Where we've tagged the whole lot, right? And that is really, oh no, the 127 is a bit higher, but I've told you guys that this was an important level also, because this one here, which I've also talked about a lot of times now, this is not only intervention. This is when US CPI started to turn around and come off, and we created a big move. So to me, this 146, 45, 65 zone is really a very, very important one, in my opinion. So okay, just keep that in mind. Now on the underside, we have tested it this morning, low 145s. So we have our picture here, 150 points in which we can move around until we take a direction. I don't know whether it's going to give a lot, but it depends how hard these BRICS meetings are going to be, because it could just impact the yen just a little bit as well. But for the rest, it's going to be yield watching on the dollar, yield watching on the yen, and then see what the reaction is next week. If we get down below, which I'd love to see happen now is a move back down to 144 for a starter. Why not somewhere mid 143s? That is if the dollar yields are softening a little bit. That could easily happen. The yen has enough how shall I say, volatility to do 150 points lower. That I would love it, because I've hedged my my 144.5 calls completely, so now it can go down, so I can start to load them up again. For the rest today, I don't have that much to show, you know. Ryan, you spoke already about the dollar China. This is what I'm looking at in the shorter term. I think the 720 is your new 710 and your new 7 in the more medium term. But I expect just a ping pong between those levels. The top end of the of today's dollar CNY is 734.5 somewhere. So I expect anywhere close there, we may see some comments again. And I'm going to stop there for today, Ryan. Yeah, I mean, just a quick one. You know, we showed it. This is your top in the 10 years from last year, and I think this is just profit taking. We have to see what happens around the 410 to call it a day or not. I think we have like 20 BPs here to monitor into the end of the week, starting on next.
Thank you, mate. Okay, I'll grab it back quickly because just a couple of things I'm looking at. Hopefully you can see that okay. See that all right?
Yeah.
Cool. Aussie dollar one I'm just keeping an eye on because this move is continuing, and if we get further down, we could start hitting some interesting levels down towards the big 60. We never got quite that far late last year, but it was a solid area with a really decent bounce after. So I'm going to keep an eye on that. If this continues, I doubt it's going to get there in one move. So it might take a bit of patience to wait for there. But if we start getting down to these low 60s, I might think about trying some longs down here again and just seeing if we get the same sort of reaction as a support point. So not really interested in getting involved here and now. But this might be a longer term trade, get a bit of a build on if we get down to say the 63, 62s, just to think about a longs down there into those prior lows. The risk, you know, where your risk is, can keep it pretty tight, can take it down to the big figure at 60, or you can just look at these lows down here. This one around 62s was a big old level as well, going back quite some way. Can't really see it there because it's all mixed in with the traffic over that, but yeah, big old level down at 62 to keep an eye on that one. Dollar CAD, did you look at dollar CAD?
No, I didn't. I didn't really. I've actually got positions in CAD and Aussie as well, but yeah, we're close to interesting levels on the Aussie, even intermediate around that 63-60 zone. Yeah,
that's a little down around there. 60, bit of a trend line coming in there as well. But dollar CAD, again, another one I'm in, and still loads of our guys in the chat room are in this one. So a lot of interest on this one. We're still banging our head on this 35.50 area. It's looking a bit similar to the same as we had at 35. Very similar price action we've got going on here. So this is potentially a bit of a make or break level. If we go a good period and we haven't broken it, I wouldn't be surprised if we ever move back down to 135, maybe even through it and down below. Still, if we're back below 34, 60, 70, that's potentially going to shake the tree a bit more, and that will maybe start to turn this trend that we've been seeing over the last few weeks. For now, as long as we're holding 35, and we did give or take a few pips yesterday, that keeps the momentum going. We just need to crack out this 35.5. Do that, we're probably 36, 136 not too long after, and I know that's a target for a lot of people in our chat room. We'll call it a day for today. What we got coming up later, not a lot. Mexican retail sales, if that tickles your fancy. Canadian producer prices as well. That's about it for today on the data front. So a nice quiet end to the week. As always, thank you to you viewers for coming to the Flow Show, sticking with us, giving us your support. I hope we're guiding you well through markets. If we're not, let us know. Got any suggestions you want to see on the show? You know how to get hold of us, Twitter, email, in here, whatever. So let us know you got any suggestions. As always, thank you to my colleagues K-Man and Stel, who's been around doing some other bits and pieces this week. Thanks for trading. Thanks for being with us. Have a great weekend all. Cheers, Kate.
Have a great weekend, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.